Coal India Dividend Analysis 2025, 4min. Hello everyone, welcome back to the channel. Today, we're talking about a stock that's a true dividend giant in India, Coal India Limited. If you are a dividend-focused investor looking for stability, steady income, and government backing, then Coal India deserves your attention in 2025. Company snapshot. Coal India is the largest coal producer in the country and one of the biggest globally. Its coal is the backbone of India's power and steel industries, supplying the raw material that literally keeps the lights on. Now, what makes Coal India especially attractive is its scale, efficiency, and financial strength. With a market capitalization of over 2.2 lakh crore and minimal debt, the company runs a lean and efficient operation. Dividend strength. Let's talk dividends, because that's the main reason many investors look at Coal India. For FY 2025, the company declared a total dividend of 26.50 cents per share. At today's prices, that translates into a dividend yield of about 7.1%, which is among the highest you'll find in large-cap Indian stocks. Even better, Coal India has a history of paying out more than 40% of its profits as dividends. That shows management's clear intent, rewarding shareholders regularly. For retired investors, conservative investors, or anyone looking for a reliable passive income stream, this is very compelling. Financial performance. Now let's look at how the company is performing. In Q4 FY25, Coal India reported revenue of 37,824 crore and a profit after tax of 9,593 crore, which is up 12% year-on-year. That's strong growth for a company in a mature sector. Their return on equity is nearly 49% on a 3-year average basis. That's outstanding capital efficiency and shows they're making the most of their resources. And thanks to steady demand and regulated pricing, the company enjoys very strong free cash flows, which is what powers those high dividend payouts. Valuation. Coal India looks attractively priced. Its PE ratio is only around 7, which is low compared to other large-cap companies. And the PB ratio of 2.3 is reasonable given its profitability and dividend strength. This makes Coal India not just a dividend play, but also an undervalued stock with room for capital appreciation. Investor appeal. So who should consider Coal India? Investors seeking steady income through dividends, retired investors who want low-risk, high-yield payouts, and even value investors because the stock is trading at relatively low multiples. Plus, remember, it's almost debt-free and backed by the government of India, which provides additional stability. Risks to keep in mind. Of course, no investment is without risk. Coal India's sales growth over the last 5 years has been moderate, around 8% CAGR. This means it isn't a high-growth story. And second, the long-term environmental and regulatory risks around coal are real. As India pushes toward renewable energy, coal demand growth could face challenges. However, in the medium term, India's rising energy demand ensures coal will remain vital, which supports Coal India's earnings outlook. Outlook and technicals. Analysts expect the stock to trade in the 367 to 480 range in 2025. On the technical front, support is around 370, while resistance is near 384. So, while price movements may be range-bound in the short term, the high dividends ensure returns remain attractive. Final takeaway. So why do we recommend Coal India for dividend investors in 2025? Because it combines consistently high dividends, strong cash flows, low valuations, and government backing. If your goal is reliable income, stability, and solid returns, Coal India is one of the best choices in the Indian market today. And remember, this is purely for educational purposes and not financial advice. Always do your own research or consult a financial advisor before investing. Thanks for watching. If you found this breakdown useful, don't forget to hit like, share, and subscribe for more stock insights.